If you wait until spring, you've already lost. If you're thinking about buying a home next year and you wait until spring to start preparing, you're already too late. The buyers who win in 2026 are starting right now, today. And nobody's talking about that part, but I am. I'm Elaine Luchini here in sunny Las Cruces, New Mexico. If you're planning to buy a home in 2026, your first one, your next one, or you're relocating here because you're tired of the traffic heat or insane prices, this video is for you. I will have my info linked so you can contact me, as well as I have made you guys a guide for you to download to get as ready as possible to buy. All right, today we're going to talk about what it really takes to be buyer ready. I'm breaking down credit, budgeting, down payment strategies, and what the current market means for your future home. The goal is simple: buying a home feel doable, not overwhelming, because when you're prepared, everything feels right. All right, so let me tell you why preparation matters. 2026 buyers will be in a unique spot. Rates are still a little jiggy, prices aren't really dropping, and the buyers who win are the ones who show up prepared. You don't start when you're ready to buy a home, you prepare before you're ready to buy a home. Because your credit, your savings plan, and your timeline all impact what kind of home you can buy and how comfortable your monthly payment is. So let's break down the biggest piece of the puzzle, which is credit. Credit is your silent wingman. When you are buying a home, credit is where most people get stuck, but it's actually the easiest part to improve if you know what to do. Your score doesn't have to be perfect, but it does control two major things: your interest rate and your monthly mortgage payment. So even a small bump in your score, 20, 40 points, can save you hundreds per month. And that's real money. That can be used for other things like gas, utilities, or even go back into your savings account. Here are the exact steps to help you improve your credit if you want to buy in the next year. So step one, we are going to lower your credit card balances. Credit utilization is one of the biggest score influencers. So here's what lenders like to see. Under 30% is really good. That means that you only owe 30% and not the other way around. Under 10% is fantastic. So that means that you have a lot of availability limits on your credit card. If you're over 50% the limit, it can be a little concerning. Now, it's not crazy high, but you still want to bring those down. Over 80, that's close to maxing out. They don't like it, they start sweating. The credit bureaus do not like it. But you don't have to pay things off overnight. You do it slow and you do it smart. Step two, pay down one card at a time. Start with the smallest one. So list your cards, write down their balances, and circle the smallest balance. You're going to pay all your minimums on everything else just the same, but every extra dollar is going to go towards that one smallest card. Why do we pick the smallest? It's because you'll pay it off a lot faster. You'll get a quick win as far as points on your credit, and your score will reflect that a lot sooner than if you were to pay on all of them. I mean, you have to pay on all of them, but it will reflect a lot sooner if you were to pay that one smaller one off faster. Once that card is gone, move on to the next smallest and do it all over again. This is the snowball method, and for most buyers, it works beautifully. Plus, one card is done, you move on to the next, and there's that sense of accomplishment. All right, step three, use the micropayment method. If you get paid weekly, pay a little weekly. Don't wait for the due date. So let me tell you how credit cards work. Credit cards often report your balance before your payment posts. Okay, so weekly micropayments help you look less maxed out and that will help you boost your credit faster. So take a look at your bank statements. for each of your specific credit cards. If the payment is due on the 10th, you pay it on the 5th. If you get paid weekly, pay a little weekly each week. Don't wait for the due date. Credit cards often report your balance before your payment posts. So weekly micropayments help you look a lot less maxed out. And that just helps you not have like big chunks of payments, once a month. Plus, what you want to do is also pay it early. So take a look at your bank statement for that specific credit card, right? If the payment is due on the 10th, pay it on the 5th or anytime before the 10th. Because also, let me tell you how this works. So if your payment is due on the 10th, that means that the credit that your card is reporting to the credit bureau. So let's say you have a $2,000 limit and you owe $300. If you pay on the 10th when it's due, it reports that you still owe that $300. Versus if you were to pay it like on the 5th or the 7th, it reports as zero or as $50 or whatever you paid minus what you paid. Because by the time it reports on the due date, the full amount will report. If you pay it down a little bit before, it reports less than you have already paid it. So it's just what reports is what affects your credit score. Hopefully that makes sense. Step 4, stop opening store cards for the love of God. Even if it's giving you like a 10% discount, Target will survive without you opening a new card. Trust me. Every new card dings your score. So if you're planning to buy a home next year, avoid new debt. Every time you go to Walmart and you apply for a Walmart card, a Target card, an Ulta card, a Victoria's Secret card, it looks terrible on paper. I know they offer all kinds of perks when you apply for the store credit card, but it's not worth it, especially if you're trying to buy a home. I know they tell you they will still give you the discount even if you get denied and that it doesn't matter, but let me tell you, it does matter. Those 5 points matter, especially if you get denied. That denial shows up on your credit report and it just doesn't look good. Even if they're offering you 20% if you open a credit card, don't do it. I know 20% is not that much, especially if you shouldn't be doing huge purchases to begin with. Pay everything on time. Step 5, pay everything on time, set it, and forget about it. On-time payments will make 35% of your whole score. So make sure you set up to pay for minimum so nothing gets missed. Your future self will thank you for it. And if you can give more, the minimum, please do. So going back to one of the previous steps where I said pay before, still set up the auto pay for minimums. Just to make sure in case you forget to do that, you still pay it and you don't get dinged for missing a payment. But if you can give it before and give more, that's even way more better. Okay. Step 6, do not close old accounts. So even if you decide to cut the old card up, keep the account open. So let me tell you how. Older credit helps your score a lot. I know that once you have paid something off, you will want to close the account to keep from reusing it and falling into like old habits, but don't do it. Cut that puppy up. Out of sight, out of mind, but leave it open because the history looks phenomenal. Okay? Everybody's tempted to do this, but if you have an old credit card, just keep it open. Okay? And then step 7, if you're rebuilding credit, trust me, you are not alone and you are not out of the game. Like the credit, it moves with the seasons, okay? So one of the greatest tools is getting a secured credit card. Use it for small purchases and keep the balance low. When I mean small purchases, I mean gas, lunch, costly. And make sure that you keep paying it down, okay? Do not let it accumulate. I started my credit card journey with a secured credit card because I didn't have any credit. So of course, when I went to I was going to buy my first car, I already knew they would have approved me because cars, they approve you anyways. But if I wanted to take out a regular credit card, I had no credit, so they were not going to approve me. But a secured credit card was a way to go. And by what I mean by secured is let's say the credit card's for $500. You literally send $500 to the bank and they send you a credit card for $500. You give the collateral. It is secured. Okay? It is a great way to show open lines of credit that you can use, and you can use that credit smartly. Slowly, they started increasing my limit year after year. The more I used it, paying it off early and on time. What started off as $500 one day, eventually was $6,000, $7,000, $10,000, like down every year. Of course, they want you to borrow more and pay more interest with it. Not the point. My point is that if you are smart and they know that they can trust you with money, they will lend you more. That's just how credit is. Okay? And a huge piece of advice: do not touch collections without talking to your lender first. Paying some collections can temporarily lower your score, which I know it sounds ridiculous, but it's true. And I'm telling you this because I've had clients that started paying collections without asking me, without asking the lender, and where they thought it was going to improve their credit getting ready to buy, it did the complete opposite. And it's because a collection is an old piece of history on your credit that you just haven't done any payments on. So if the collection gets sold from one company to another, it updates the date. And then all of a sudden, it dings your credit as something has changed, and it could be a company. And so it dings your credit and your credit comes down. It's the same thing when you pay it off. Even though the balance on there might be zero, there is an update to that account and it will lower your score before it comes up. So please ask if it's okay for you to pay collections, especially because sometimes you may not have to pay everything down. Once your lender has given you the green light to pay something off, they should and will advise you to call the collection agency and try to get them to settle for less. So let's say you have a $500 collection, they might settle for $250, right? But the most important part is to ask them to please, I say this nicely, can they take off the collection off your credit bureau? So if you paying off the collection is gonna bring it down, what we want to make it do is not exist at all. So you could say, hey, I will pay you $250 on this $500 collection. I will even pay you the $500. But will you please give me something in writing that states that you will take this collection off? Most of the time they will, sometimes they won't, but it's worth a shot. And then all of a sudden that collection doesn't exist and it helps your credit go up instantly versus waiting 3-6 months for it to come down and then go back up, and here you are waiting some more to get into a home. All right. Step 8. Give yourself 3 to 6 months. Okay, so most buyers see noticeable improvement in the first 60 to 90 days, but the major improvement happens in the 3 to 6 months. Make sure you keep an eye on your whatever app you're using or your statements you're using to see what's coming off and how your scores are improving. Some lenders will even be able to give you a scenario based on your credit of when you can see these credit numbers go up. So let's say they tell you to pay down a certain credit card. They can actually tell you, okay, like in 2 months, you will see a 20 points go up or 40 points go up. So they can actually pull scenarios for you, which is nice, especially if you're looking to buy sooner rather than later. Okay. Now let's talk a little bit about budgeting, my favorite. So very quickly, and this is another video, I will touch a little bit on it. Okay, you do not need 20% down to purchase a house. Most buyers buy with 3 to 5% down. There's even some programs that will get you in with nothing. Okay, but usually it's anywhere from 3 to 5 if you're buying a house you're going to live in your primary home. Closing costs, you should budget about 2 to 4%. Okay, so that's a whole other video as well, but usually about 2% to 4% of the purchase price is what's going to cost you on closing costs. And remember, your payment depends on the price of the home, the taxes, the insurance, interest rate, and HOA fees, if there's any. Now, if you live here in Las Cruces, or I will tell you, there's not a lot of places with HOAs, and the few that do have HOAs are actually not that crazy high if you were to go to bigger cities. The easiest way to prepare for a mortgage payment is to set up a dedicated savings account for your home fund, okay? Move money into it weekly or bi-weekly and treat it like a bill. For example, once you talk to a lender and they give you an idea of what a monthly payment is, let's say it's $1,800 a month. If you are not currently paying rent, then ideally you should be able to take $1,800 a month into a savings account. It will get you used to your payment. If you are paying rent, take the difference of what you assume your mortgage payment is going to be and what you're currently paying for rent, and put the difference into a savings account. More if you can, especially if you're saving for a down payment. It helps you save and it gets you used to the reality of a mortgage payment. I tell my clients all the time, especially the first time home buyers that are moving from parents, or they don't have a big payment, but they're getting ready to make real life happen and buy a house. It's like, you know that you can do it if you can put that money aside every month and not touch it. It's really the only way that it's going to prepare you for a mortgage payment, right? And if you are going up significantly from a rent into a mortgage, put that money aside and don't touch it. And honestly, that's how you know if you can give the payment or not. Right? So, if you're looking to buy about 12 months out right now, here's your plan. If you want to buy in the next year, 6 to 12 months, here's your plan. Start improving your credit. Okay, everything that I told you to do, if you fall in any of those or all of those, start doing those things. Try not to change your jobs unless it's really paying you more. If you just like to change from one job to another, don't do it, okay? Because they do look at that. If you find yourself a job that pays more and you can help you qualify for more home and it's just a great opportunity, yes, it's understandable. But try not to change jobs if you can avoid it. And start saving. That's the biggest thing, is start putting money aside for a down payment. Research neighborhoods. I can help you with this. Even if you're far out, you want to envision yourself as far as schools, parks, what you can do. Maybe you like to walk to restaurants versus drive, or you want to live by a golf course, or you want to have mountain views. So research where you want to live. Yes. If you're about 3 to 6 months out, let's say you want to get in from next spring to next summer, talk to a lender. They will help you get ready. Knowing your price range will help you when you manage expectations on a payment when the time comes. I would hate for you to be seeing homes at $500,000 and yet you only qualify for $350,000. Like, it does happen, but I don't want you to have thoughts of you could be living here, but we're only here. And if you want to be at a bigger price range, maybe there's some work that we need to do with debt. So talk to a lender first and see what we need to do to get you where you want to be. And start tracking the market. There is some strategy to this, okay? Homes that stay longer on, you can usually get better deals on. And as far as timing goes, honestly, there's no perfect time during the year. Yes, you might find some deals later in the year with builders and stuff like that, but it's going to be whenever you're ready to buy. There is no magic ball for this. It's just whenever you're ready to buy, that's going to be the time. And if you're looking to buy in the next 3 months, get pre-approved before we start touring. I can help you find a good lender depending on your situation. Okay, let's talk first and then we'll see which kind of lender we're looking for because different lenders do different loans. Then once we have a budget, we can go and see all the houses that you want, okay? Because you will know once you see a house what roughly that payment will look like, okay? You're not looking at houses blindly. Plus, I would hate for you to look at a house that you absolutely love and then you don't even qualify. Or I would hate for you to feel like you're house poor once we do go under contract or you do have a house. Like, you do not want to be house poor. I promise you, I will help you build a good strategy. Okay, so if you're looking to relocate to Las Cruces, preparation matters. You're choosing a whole lifestyle, not just a house. I help a lot of families compare neighborhoods, schools, commutes, and find amazing homes. So reach out, please, if you need the guidance. I have all the time. Okay, I will have my information linked for you down here. So buying a home shouldn't feel scary. I know it does. I've done it and I know how nerve-wracking it is. And I can help you with that. Okay, I can at least help you manage expectations. If you start early with credit, with budgeting, with savings, you'll walk into this a lot more confident and a lot more calm. It's still going to be stressful, but I am here to help you and to guide you even through the sleepless nights. I promise you. It is so worth it once you come to owning your own home. And if you want a little bit more personalized plan for your credit, whether it's 6 months or a year or you're relocating, please send me a message. Like I said, I will link all my information for you. Just reach out to me. We'll look at your situation and make a no judgment plan to get you buyer ready for 2026. So trust me, I've seen it all. Okay? Move in, breathe out, and be happy. Catch you guys later.